Hey, if you're tired of losing trades just because you thought the market was about to reverse, this video is for you. I'm going to show you on real examples how to pick the right charts, how to find solid entry points in 3 simple steps, and share my stats from using this strategy. Let's jump in. This strategy avoids fighting strong trends. If the global trend is bullish and you're trying to catch a drop, you're going to probably lose that trade. This approach works best on flats or on pullbacks when the trend pauses temporarily. I always start by identifying the trend. If you're trading on the 1-minute chart, zoom out and check the 5 or 10-minute time frame. Here's what to look for. If the price is moving up with pullbacks, it's an uptrend. Price is dropping, a downtrend. Price is bouncing up and down within a tight zone, that's a flat. Once you've spotted the trend, start drawing support and resistance zones. Remember, level is never a stable line. There are often zones where price reacted multiple times. For example, if you see that price bounced 2 to 3 times from the same area, or left long wicks, that's a strong level. We'll be looking for reversal points there. If price breaks a level easily, without reaction, it's probably weak. Skip it. Next tip, before you start trading, always check the economic calendar. I use investing.com. During news releases, levels often don't work, and price just breaks through them. Best to wait it out during those periods. Now, pay attention to how price behaves around that level. If candles are getting smaller, showing long wicks, that's your first clue that the move might be ending. This is where reversal patterns start forming. These might be, for example, a hammer, small body, long lower wick. It says that price dipped but snapped back fast. A possible reversal up. There's also an engulfing pattern, when a big candle fully covers the one before it. It means a strong shift in direction. If a doji candle appears, small body, long wicks, it's a sign of indecision. Alone, it's not an entry signal. But on a strong level, it's a warning sign to watch the following candles. Finally, last but not least, watch volatility. It's market energy. Small candles mean that market is chilling. Big candles, market is moving. If you see a candle pattern followed by a big candle, the moving has started. That's your entry. Let me show you 2 examples. Trade number 1. Here's a chart with a strong uptrend. Price is steadily moving along the trend line. Impulse after impulse. So I open a trade in a global trend direction. At one point, price hits resistance and pulls back. Then it pushes back up again, testing the level. Watch the candles closely here. Price touches the level with just a wick, then there's an impulse that confirms the trend strength. At that moment, the market kinda slows down. Candles get smaller. Then suddenly, a big green candle appears and completely covers the previous red one. That's a classic bullish engulfing pattern, and it often signals a reversal from a strong level. Everything lines up. I enter a 15-minute trade up to avoid consolidation. I confirm with ADX. Blue line is trend strength. If it's above 25, it's strong. It's our case. Also, red line is above yellow, so the bulls are dominating now. So we've got the trend, the level, the candle pattern, volatility, and confirmation from the indicator. Trade closes in profit. I want to start making money online, but I don't know where to start. What if I lose my money? I hear this all the time. Look, trading isn't some magic button to get rich overnight. But if you want to try it the right way, without wasting money or months figuring things out, here's how. I trade on Quotex, and right now, you can copy my trades for free while learning in real time. No upfront fees. I'll get a commission from the platform instead. That means you can test everything on a demo, see how it works, and decide for yourself without spending $1. It takes minutes. You get the currency pair announcement. Open it on the platform. Then you get the signal. Place the trade. And that's it. Will this make you a millionaire tomorrow? Of course no. But it will get you started, you'll see how it works, and see your first profit without risk. This is the easiest way to step into trading. Just check it out and see if it's for you. Click the link, get set up, and let's go. Trade number 2. Now a different setup, downtrend. First, Price breaks the trend line, then starts moving sideways between two levels. Classic consolidation. This is where I use the back to trend strategy. I wait for price to move back in the direction of the trend. Watch price reacting at resistance level. Candles only touch the level with wicks, but close higher. A sign that the level is strong. Then a doji candle shows up. Small body, long wicks. It means that the market is indecisive. Right after, a big red candle breaks in. That's the entry. The pattern is confirmed, volatility spiked, and price reacted again. I go in 14 minutes put. I check Quotex. Red line is buyer's strength, yellow, seller's strength. Here, yellow one crosses above red, a sign that bears are gaining control. Also, lines start spreading apart, so the trend is strengthening. If you follow these steps one by one, you will easily get the same kind of results. Here's my personal 3-month stat sheet using this strategy. You can see that it works when you stick to the rules. If this breakdown helped you, don't forget to hit like. And if you want to see how I trade in real time, get daily setups and trade breakdowns. Join my Telegram, links in the description. See you in the next one. And as always, stay safe and be in touch.